Hello, everyone, and welcome to Pulse of Fisdom with Nirmal Bang. I'm Avan Dabash. Well, it's been an interesting year for the markets, but what's the outlook on top sectors, stocks, valuations? We've got Samir Arora of Helios Capital joining in. Samir, thanks so much for taking time out. So, crystal ball gaze, what's 2025 going to look like?
So I think 25 obviously will not be as good as 24 in terms of overall returns. Overall means a 500 index type returns. But I am, unlike many others, not predicting that there will be a crash because there's been a big rally. In fact, I recently tweeted that if you look at the last three big crashes in our market, which happened in 92 and 2000 and then 2008, they were preceded by years which were very obviously in a bull market where the Nifty itself was up around 60% in each of those 3 years. This year, Nifty is up some 9 odd percent, and even the 500 index is up some 14-15%. So my best guess is that you will have reasonable returns. And if US continues to be positive, which is quite likely, then India may underperform it, but will have positive returns near or higher than double digits.
Okay. And which are going to be some of the top sectors or two stocks that you want to share?
So big picture, actually this year was extreme in the sense that the small and mid caps continued to do well and the large caps basically stalled, and the large cap returns for this year are much lower than our 3-year, 5-year, 10-year, 20-year average. And our and the 500 index, which is more realistic representation of the market, which is basically the flexi cap equivalent benchmark, that also was not much higher than historical numbers in the range of 14-15%. Therefore, this explains two things. One is that in the last 3 years, our market has not become more expensive than before. Although you can say in recent one quarter and maybe one more quarter to come, the results will be a bit below average because the results are below average. Therefore, on that basis, I say that you are not overly you're not inflated your valuations in the last 3 years if you leave out a handful or maybe 50 stocks in small and mid cap sector. And therefore, plus minus the earnings growth you can get in the market. Now, our job is to do slightly better than the market and to buy stocks which are otherwise doing well but may not have performed. So the obvious big thing in terms of stability and what we call high confidence in reasonable return, we will put in the two big private sector banks, which is HDFC Bank, ICICI Bank type things, which have done well, but which have also done well in the bad environment of last quarter and broadly have overall not been re-rated in the last, particularly HDFC Bank has not at all been re-rated but has been de-rated. But we also need a few stocks or sectors where we can imagine the growth rate to be 20-25% type number. Because even though the whole portfolio may have 40-50 stocks, you want at least 10-15% to give you this jing bang. And there my best hope is on the platform type companies which range from Zomato to Swiggy to Cartrade, TB Fintech, Paytm, but cumulatively only around 14-15% of the portfolio. On the basis that there will be a shortage of stocks that are delivering 20, 25, 30% type earnings growth for their 2-3 year future, and there will be interest in that because the overall rest of market will be growing in 10, 12, 14, 15% type numbers or lower.
You've spoken about the EV sector, saying that it's a capital guzzling threat that's akin to running on a treadmill. What is so bad about running on a treadmill, and why do you have this view on the sector?
When you run on a treadmill and you get off, you are at exactly the same place. And therefore, you have spent all this energy in a company that is not required. Maybe an individual where the goal itself is to spend the energy, you can run wherever you want. But I was early in this, but you can see it around the world. Even the Japanese guys have panicked. Basically, the Chinese. By the way, I have one more prediction or hope, big picture, which is that India should make amends and become friends with China a little bit. The border situation seems to be resolved or resolving. And there is more meeting, but the point is that they are so far ahead of us in many technologies, and many of these things are not some security issue. They are not some big security issue that if we get solar technology from China or we get even some EV technology from China, because anyway, they'll be required to set up investments here. On the other side, from their side, they are getting blocked off by everybody. Those technologies we cannot get from US because US doesn't have it. So you have to do a deal with saying, okay, X percent, let's say, I don't know, say maximum the Chinese can own is 51% or 60%. You must have a domestic partner. Over some X number of years, you must localize A, B, C. Because although I think we will never ever be able to catch up with them on EV and solar type technologies, but if they were producing those things in India, then the supply to those things can be done in India. Some technology transfer can happen. God knows, some software can be developed. I have no idea. But what I'm saying is, our goal is not to compete with China on reaching the Chinese level. Our goal should be that we will grow more than them. Let us say, I don't know, let's say GDP, they are growing 5, we should grow 8. So that somewhat there is catching. It should not be that we are willing to grow 6, but we will not do any deal with them. They are also keen because they are also getting blocked from the rest of the world. And it is reasonable to believe that some progress is happening because you can see every day that we are talking about. And if that happens, it can be very negative also for the auto industry, or it can be positive if some of these existing guys themselves become partners of those guys. But we've already seen JSW talking that they are going to make EVs with what's the company? MG. And if BYD were to come, it could hurt or help depending on who the partner is. But you can't stop this forever and say, we are going to develop. Or to let me assure you, we are not going to ever reach those standards because we are so behind. You think we are ever going to have, because in the meantime, they are also still developing. It's not that they are now waiting for the rest of the world to catch up. So auto sector, we can see that the Chinese have taken over. Not only that, you can see it around you. Why are you thinking that I have brought it up now? I brought it up early. Now you saw General Motors writing off their whole project in China. The Japanese guys who are supposed to be the big guys panicking and trying to merge. And you can broadly see it in the stock prices. In Volkswagen's case, different plants in Germany are fighting with each other as to which plant should be shut down. And here we are dreaming of our 2-3 companies which have zero technology and 100 million rupees in their pocket to develop. Not going to happen. Let's just be realistic about some of these things.
Okay, and you guys were also anchor investors in Swiggy. That theme is really played out. Quick commerce, new age tech. What's the sense that you're getting on this space?
So what happened? We had Zomato for long. We had bought it around 52 rupees. And generally people say, oh, I have Zomato. But then we realized when Swiggy was happening, that why are we taking it that we don't need a second one because we have the first one? Because in our life, when we bought IT, we didn't buy only one company. When we bought private banks, we didn't buy only one bank. That theme is powerful, and then somebody may implement it a little better and somebody may be a little cheaper. So the idea is that the growth is quite big for a number of years. And according to me, it is very logical also for this business to grow in India. You tell me if you are going to pay 20 rupees more, but in return in Delhi, you don't have to go out in a 450 AQI environment. I think many people over time will say it's part and parcel of the game. And in India, it is possible because of disparities in income that you can have delivery at a cheap price while the consumer doesn't care paying 5-10 rupees more. And also if you buy a little bit more, you don't even have to pay those delivery fees and other things. If you see the penetration cumulatively, it might be 1 or 2% only. So let people come. But generally, if you've seen in any business, the first 1 or 2 guys, unless they make their own mistakes, normally they continue to grow. Now they might grow a little less because some 2-3 more guys have come. That we are comparing it to the consumer sector where the growth rate when it is good is 5% and when it is bad it is 3%, or some other sector like that. So relatively also within India, as I said, for a small part of the portfolio, everybody is going to have it according to me, because there is logic, there is growth, and there is lack of growth, or very average and below average compared to history growth in other sectors.
Right. And can you tell us a little bit more about, the capital market related stocks? You've spoken about that as a theme. How you're looking at infrastructure as well as a sector?
So digital, as I said, I like all of them because of one more angle in the digital is that these days we talk about slowdown in the end consumer market, but most of these digital guys are basically in the first round relying on change of habit or change of mode in which you buy. So whether insurance grows or not, you and others are going, and the public is going more online because it's easier. You don't have to deal with pesky agents and all. So therefore, doesn't require that the end growth be high. But hopefully, in the next 1 or 2 years, even the end growth becomes double digit for all these things, and therefore, then you can at worst say, okay, we are growing as much as the market is growing. Right now, it is more a change of market share between existing modes and these new modes. So therefore, that part is so capital market stocks. Basically, now we have one AMC and we have the depository, and even we have actually a broker also, because the idea is that the market is doing well, and based on both investment banking and mutual fund distribution. So the market is itself doing well, but there you have to be careful. If the market corrects, these guys will correct more. So I am not willing to say that these are stocks forever. It depends. If the market continues to be broadly positive, it doesn't have to go up 20%. But if the market goes up 10%, then many of these things will go more than 10. And if the market falls 10, they will fall more than 10. It's a high beta play. But again, cumulatively, we might have some 10% or 8% in all of these. We are very disciplined. Our performance has come from our process and not from any one stock in our life. So no one stock can change our life. But if the whole sector does badly, that will change for a few months our NAV life.
And financials has been a great area of interest. You focused on banks and a lot of these intermediaries. You've spoken about how HDFC Bank, Kotak Bank, some of the marquee names like Bajaj Finance as well offer good opportunities. So what's the sense that you're getting? Is it very demarcated? Are you going to stick with the large caps versus mid caps and banks?
As of now, yes, absolutely. Even if you see we have a financial sector mutual fund in India. And if you see, I saw at the end of this month, basically they have also sold off not even now, they've sold off 3, 4, 5 months ago only, all these smaller banks which were there in the beginning of the life of that fund. So even in a focused fund, they only have the large cap name, because that is coming from our research saying that currently there is a problem in microfinance, in personal lending, small ticket and all that, and these things don't change in a quarter, because the last quarter was sort of the first bad quarter. These things you can't suddenly change in one quarter. It'll take away 6 months more of their life. And so we are basically in HDFC Bank, ICICI Bank and State Bank as far as I'm concerned.
And IT as well, we did see a bit of a challenging period that started in 2022, and you guys had cut your holdings to zero within IT, and now you've re-entered the sector, and I believe that you think that the worst is now behind. So what's giving you that optimism in IT?
So the thing is that only the bad news is over. We don't know about the good news. But over time, I say 5, 7, 10 years, I think AI will eat up all these things. The only hope is that AI, it might work, and you will be able to show that it can do ABC. But companies will not be able to quickly switch and say, okay, we are giving up on what we do and we are taking over this system for our marketing research, for this research, for product development. So all those things that companies will have to take many years to adapt. So there might be solutions available, but the IT business might continue. But if you look at the real scary podcasts on AI, basically everything will be done, from drug research to weather research. I'm saying if you do those kind of things, they will definitely be able to answer your phone calls and be able to write your code up to a point. Everything that the Indian billing help and insurance processing and all these things that the Indian guys are doing, in the end are going to be done by AI. The question is whether it takes 10 years or 5 years. But we are right now hoping that it takes longer, because the companies themselves, the end customers themselves might need help even to adopt. But if you are really into AI projecting, you can be very scared about the world one day. In terms of these jobs and this activity and repetitive activity, many things that the Indian companies do, but for the moment we are just pushing it, saying it too early. I mean, just to tell you one more interesting story. So one friend of mine sent me, actually I should tweet, maybe I'll do it today. So he fed our investor guide into this Google, whatever it's called, AI, and it has become a podcast where two artificial voices are discussing Helios strategy. Okay. And they're really chatting with each other. In fact, I'll do it after this. So these are the kind of things that is being done by AI.
And what's the sense when it comes to some of those classic PSUs, SBI, Bharat Electronics, etc., and a lot of these PSUs that have done quite well? How are you looking at the entire PSU basket? Is it promising?
So previously, that is up to around this election time and before the budget, we were looking to make sure that our PSU weightage is something, because PSUs as a category was doing well, and there were some stories related to unlocking of whatever underlying value in terms of selling off, privatizing, this, that. Now I think those hopes are gone. So now we have many PSUs, but in our mind, we don't look at them as saying, what is my PSU weightage? Because PSU to do well should need one of the following two things. Either they should be incredibly cheap. So you say all PSUs are cheap. No, none of them are cheap. Or any different. Or second, you should say that there is a top-down attempt to change the functioning of a PSU and bring in partners and give them freedom and unlock value. That is also not happening. So now it's a regular PSU. You want to buy NTPC, buy it. You want to buy, don't buy. We have bought. You want to buy State Bank because it looks okay, but don't try and remember that it's a PSU. It makes no difference. They are not cheaper that way than a regular guy. If you think that sector you need to cover or that stock is good, you're buying. So now we are not calling it how many PSUs we have, in the sense it is not being viewed under that bucket, which prior to budget I was dreaming that one or two of these companies will be completely privatized, and in some of them there'll be real estate unlocking and excess land will be sold. Nothing like that seems to have happened or seems to be happening.
What is the best advice that you've ever received on the markets?
Well, I don't know. I received it from an individual or from reading books, because in the long term, all these things get mixed up, because even somebody gave me a book, that would be. And that is that over time, you should have faith in equities. What that means is that when markets fall 30%, you may not add because you might be in panic or feeling bad, but you don't walk away easily. You may walk away from the same company, you may walk away from the same fund manager, but you don't walk away from markets. This has helped me deal with my own investing in the previous 30 years, but also to explain to investors in bad times by showing them that you look at any period and equity does well. So it has helped me both personally and professionally. But it's not that I can attribute that which fellow advised me on this.
The best performer or the best bet that's really done well for you?
No, that is not our style. Our style is that we don't know whose turn it is next. So what we have done is we have got two kinds of stocks. One is the regular kind of stock like this HDFC Bank, ICICI Bank type, which is that large, big, well-known companies where we are hoping to make slightly more than the market. Maybe 2-3% more. If we can make it, will be great. Which means the market, we think, generally makes 12, 13, 15. So if we think it'll make 16, 18, it's great. And the second group is we buy 20 companies of 2% each, where we hope that a large number will do well, but we don't know which ones will do well. Like, who knew when Zomato was 50 that will become 300 and we'll still be saying it's very good? Who knew? So the point is, but when you buy 20 companies and you have done your research, then mostly you can weed out that many of them will just go to zero or will do very badly relative to market. But exactly whose turn it is next is left to the what the market prefers in any one phase in its life. Therefore, we cover all the angles. We won't have all of them from one theme. We won't overly buy any one stock, but we know that as a group, this thing has worked for nearly all my life.
One stock that there's been too much hype around.
So I think the biggest hype has been around solar stocks, because the solar stocks are basically being protected. If my theory works, which I think is high probability, that someday India will realize that there is no need to fight on basic technology where there is no negative in terms of security, and these things are allowed into India. All the big guys, that is Adani, Reliance, Tata, all of them have already announced that they want to do it, and if they had partner, they could accelerate their investments. So these smaller solar guys who get 1,000 crore and 500 crore type orders and trading as if they are working in a global unprotected environment, I think will do badly over time.
Okay. All right, Samir, it's been a pleasure interacting with you as always. Thank you so much for joining in.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.